Okay, so it's safe to say that since my last Stocks and Shares ISA update, things have gotten a little bit crazy. Once again, we have hit another record high with inflation. Oil and energy costs have just gone through the roof. And of course, let's not forget about the awful situation that we are currently witnessing over in Ukraine. And whilst it's obvious that of course events like this will have a negative effect on my investment portfolio, it's important to recognize the fortunate position that I do find myself in, where I can come home to a safe place every single day and I have full access to food and drink. Which is why I'm donating 100% of this video's ad revenue earnings to UNICEF to help protect children and their families in Ukraine during this awful time. I will also be leaving a link to the UNICEF website in the description of this video down below for anybody looking to make any additional donations. But having said that, let's get into the update. Alright, so what you can see here is my Stocks and Shares ISA that I hold within Hargreaves Lansdown. This ISA consists of both individual companies and Vanguard ETFs, and we're going to be going through them right now, starting off with the lowest holding in my portfolio, and that is going to be Facebook, or what people call Meta platforms. Now, if we take a look at this company over the past month, as you can see, things pretty much have gone from bad to a little bit worse. When I did my last update, we were coming fresh off the back of their recent earnings calls where things didn't go well at all, which actually caused the stock to crash 25% in one day. So that last update wasn't a very good one for me, and things really haven't got too much better for Facebook since then. Now, I think a lot of this is down to the general state of the market at the moment, but one thing that I haven't seen from Facebook to really indicate that there is going to be a positive shift in this stock price is any kind of positive news since that first update of their earnings around a month ago, which I did actually mention in the last update that I was a little bit concerned about where this stock is going, but I just think recent events has kind of masked over that. So I'll sit on this one and we'll see in a couple of months. Next up, we have my investment into Coca-Cola stock. Now, with this company, it's now coming up to around my 2-year anniversary in terms of investing into this business, and we're sitting at a current value of £2,321. Now, when it does come to this company, out of all of the different stocks that I own, I would probably say this has been my best performer over the past month. Yes, if we take a look, it is still down slightly over the last 30 days, but when you compare it to all of my other companies, this has been the one that has been able to hold its own the best in this current market climate. And I think a lot of the reason behind that is because I've been seeing a lot of jitters around a potential recession incoming. And if you didn't know already, Coca-Cola, alongside companies like Walmart, McDonald's, are all companies that are known to be great stocks to hold during a recession. And I do think it has helped this company hold its stock value over the past 30 days. Now, another reason why I don't think that this stock has suffered too much recently is because the company recently actually came out and announced an increase in their dividend payments. They are now paying 44 cents per share every single quarter. Now, of course, when a company announces a dividend increase, it's always going to be welcome news for investors. And another reason why I think this has done well is because the company also announced to resume their share repurchasing, and this actually caused the stock price to rally while most other companies fell. But in terms of my investment into this company, it's a company that doesn't really give me any emotions at all. I feel completely comfortable with it. It's a company that I will hold for the long term. It's one of my favorite companies in the world. As you can see, I do love their products, and like I say, I have no real emotions, and of course, it pays a nice dividend as well. Next up, we have the first Vanguard ETF in my portfolio, and that is going to be Vmid, which covers the FTSE 250. My current value sits at £6,552, and once again, just like all my other holdings, it is trading slightly lower. Now, when it comes to ETFs and funds, they're never going to see the volatility that an individual stock will see, but once again, I think the reason why this fund is trading slightly lower is once again the rumours of a recession incoming. And whilst news like that will affect an individual company's stock price a lot worse, obviously funds are made up of individual companies, so they're also going to see an effect, but it's not going to be quite as harsh. In terms of my plans for this fund going forward, it actually sits right at the top of my priority list in terms of places to put my money, but right now I can't actually invest into anything because I actually have a really good problem, and that is the fact that I have now maxed out my Stocks and Shares ISA. This means that I have put in the £20,000 limit into my account, and I can't add any more money into this account until April the 6th, which is in just over a couple of weeks' time. However, when that time comes, it will be one of the first things that I decide to invest in, and hopefully by then the price is still going to be at a level where I can get it at a really good value. Alright, so next up is my investment into Apple stock, with my investment currently sitting at a value of £8,754. Now this is a company of mine that has been absolutely crushed over the last month, with it dropping over 10% in value over the past 30 days. Once again, this is nothing that I'm too concerned about. In all honesty, before this downturn in the market, I actually thought that Apple stock was probably a little bit too overpriced. Right now at this price, the company is back down to a PE ratio of just over 25, which is still maybe even a little bit overpriced. But back when it was at $170 per share, I was thinking to myself, yeah, it probably does need a little bit of a correction to see its fair value, and that's probably what's happened. Now, despite it being a pretty rough month for Apple stock, there was one thing last week that was a really big positive, in my opinion anyway, and that was their recent announcement event. Now, I know these kind of events always have their critics, but in my opinion, I thought it was a really positive one, especially from an investor point of view. First up, they announced that they were releasing a new iPhone SE. However, this is something that they do pretty much this time every year, so I was fully expecting that. They also announced a new range of iPads, but the thing that got me really excited was the announcement of their new Mac Studio, which is a brand new product line. And let me tell you right now, once this laptop gives way, I am definitely going to be investing into one of those, because the product looks absolutely fantastic, and it really does solve a problem between those people that don't know whether they want to get a laptop or whether they want to actually get a full desktop PC. This looks like it's going to be able to do both, so I'll be seriously looking into one of them. I think that's going to really reflect in their sales revenue of these types of products in the future. Now, moving on to my largest position in this portfolio, and probably the position I think will be the largest for the majority of my investing career, and that is going to be my investment into the Vanguard fund called VUSA, which is a fund that covers the S&P 500. My current value of this fund sits at £14,498. Once again, as you can see, this fund is currently down over the past month, but one thing that did surprise me, despite all of the bad news over in America, it actually held its own quite well over the past couple of months. It didn't drop nowhere near as much as the FTSE 250 fund that I mentioned earlier, but the one thing to remember is that year to date, this fund is still down pretty bad. So if we take a look at it, I'm roughly £1,000 down from the update that I did 30 days ago. And despite all of my holdings taking a beating this month, and on paper things don't look too good, the long-term plan still stays the same. All I'm going to keep doing is investing into the funds and the companies that I truly believe in, and of course put all of my focus into maxing out that 20k stocks and shares ISA limit every single year. In fact, if you wanted to know how I managed to max out last year's 20k ISA limit, then you need to check out this video right here. It has everything that you need to know.